What to do, Aereheads? You're here back for another video. Today we're going to be talking about building a portfolio. We're going to be talking about what I think is the proper way to build a portfolio. You got to remember, this stuff is all opinions, but I think I toe the line with what a lot of other people say. I might deviate a little bit on certain areas, but we're going to talk about my strategy for portfolio building into a bull market. Now, my portfolio strategy is different in a bull market than it is in a bear market. In a bear market, especially one like we've seen over the last couple of years, where it's for the most part been a down only. I mean, let's go to the monthly chart, right? I mean, it's different, right? I'm sitting on predominantly stable coins. When the market's dumping like this, when we start to find a bottom, I'm hopping into Bitcoin, right? Still sitting on a bunch of stables, but I'm hopping into Bitcoin more and more. But as we start to build up into these spot ETFs and into a potential alt season after Bitcoin does its thing, it's time to start thinking differently. Now, I'm a firm believer right now, in our current state, there is more upside potential than downside potential on altcoins. You got to remember, there are lots of different ways to trade. There's perpetual futures, there is ETFs, there is spot plays, actively managed portfolios, hold for the long term. A lot of people out there marry bags, right? There's Bitcoin maxis out there who will only buy Bitcoin. There's XRP maxis out there who think XRP is going to go to $5,000. My opinion on this is that an actively managed portfolio is best for most people. For the general public, for most people who want to invest in crypto, actively managed spot portfolio is best. Leveraged futures are not. Statistically speaking, the general public loses on perpetual futures. Spot plays, in my opinion, and actively managing those spot plays, meaning if one is not performing like you think it should, hop into another one. Play the hot coins, sit on one for its run for a few months. It starts to fizzle out, find another one, hop in. That's what I mean by actively managed portfolio. What I also mean is markets running up, right? Markets running up. All of a sudden a downturn starts to happen. You close out. When the writing's on the wall that we're in for a correction, you hop out of your spot bags, you buy them in cheaper here, you ride it up again, right? So you're basically your dollar cost averaging in your plays, right? And then same thing here. When you see the writing on the wall, you hop out again. That's what I mean by actively managed portfolios. You can buy those same coins again, buy them in cheaper, multiplying your supply. And we all know, and if you don't, I'm here to tell you that the vast majority of retail, dumb money, that's what people call it. I hate to tell you guys, who kind of got in, right? Who bought in kind of full mode. A lot of people bought these tops here and then are still holding their coins all the way down. I know you know some people who have done that. I know a lot of people who have done that. I know more people who have done that didn't do that cashed out at these tops. I know you guys have seen the memes where it's like 69,000 Bitcoin and a bunch of people are lining up at a stand to buy it, right? And then there's $15,000 Bitcoin and no one's there. That's exactly how this is going right now. There is no new money coming into crypto. There is no new search. I mean, Google Trends is at like an all-time low. Spot plays are at a 4-year low. Nobody's here when Bitcoin is at its lows. This is where you buy. You buy low, you sell high. That's how you make money. You don't come in at the top when it's FOMO and it's all over CNBC and everyone at work is talking about, hey, have you seen Bitcoin? So you buy some. You buy when it's low. And we're going to talk about what I think is the formula of what you need to do here in a second. But the easiest way, and I know life is busy. There's a lot going on right now with the economy, the macro, everything's expensive. Nobody's got time to do anything. Everyone's working jobs. I mean, the jobs report came out today and people who are working 2 or more jobs is like increasing exponentially just to keep up with inflation right now. Inflation numbers are blown out of proportion, right? I mean, they're saying 4% inflation, but you look at things like olive oil up 130%, sugar, corn, cattle prices. I mean, even orange juice is up like 130% since the start of the pandemic. So it's tough out there. I get it. If you want to make money in crypto and you like crypto, the best thing you can do is stay informed, stay involved, and show up. If you're here right now and you're watching this video, you're already one step ahead of everyone else. But the best thing I can do and tell you is to, number one, have some money set aside. Whether it's stable coins or cash, have some money, even if it's like $100 a paycheck, $50 a paycheck, whatever it is, whatever you can afford, throw it, put it on the sidelines. So when that alt season, when the bull market does happen, you can act accordingly. But my next piece of advice before we get into the meat and potatoes of this video is to watch out for the charlatan crypto influencers. Watch out for the fake traders. Watch out for the people who are selling you courses, who are pushing a bunch of crap affiliate links. Watch out for the clickbait, engagement bait crypto traders and influencers. I know you know who they are. They typically are going to pull out the bigger community coins like XRP, Cardano, and hashtag those all the time. Hashtag XRP army for engagement, for clickbait. Watch out for these guys, the fake traders. I know you know who I'm talking about. Be careful. That's why on this channel, in this Discord, in our community, I try to teach you how to trade and spot these things for yourself. If you're in the Discord, you know this is not a signals group. Those are all bullshit. I mean, I could do a whole nother video on that. But just know that in our Discord, we are actually teaching you the fundamentals and how to trade. And guess what? It's free. I'm a trader. That's my job. First and foremost, I'm a trader. I don't give a shit if I make $1 on this. I mean, the reason that I'm doing this is the Feynman method, the Feynman technique, right? I'm doing this to make myself a better trader. So just be careful for the charlatans out there. Listen to yourself and to your gut. Learn yourself. Don't listen to anybody, myself included. Try to learn this stuff yourself. No one has your best interest in mind. Everyone out there has their own interest. They're doing something for a reason. My reason for doing this is to make myself a better trader. There's a lot of other influencers out there who are the same way. There's a lot of good ones out there. I don't want to shit on everyone. I'm not. But just know that most people, myself included, I have my best interest in mind when I'm making these videos and when I'm posting in Discord. And that is to make myself a better trader by posting my TA and my technique, because it helps me refine those. The Feynman technique, if you don't know what that is, Google it. It is a solid, strong technique. It's doing this makes me a better trader. You need to join a community, whatever community it is. It doesn't have to be my community. Find one that fits your style. You know, some people aren't going to like me. That's fine. Some people like BitBoy, for example. Some people hate BitBoy. You know what I mean? Everyone has their own flavor of people that they kind of gravitate towards. But stay informed by joining a community that fits you, where you can stay up to date on the news, where you can see the trends, where they're posting, where they're telling you the news and what's going on in the market. That's the kind of community that you should join, and find one that fits you. That's the biggest thing I can tell you is you're busy. You got a 9-to-5 job. You got kids. You got a family, a girlfriend, a wife. There's a lot going on, but join a community, be active in that community, stay informed so you can figure out the ebbs and flows of the market. And if you feel like giving me a shot, I want to be a part of a smaller, growing crypto community. That's free. The alpha is free. I post charts, I post alt plays, I do live trading. But more importantly, I'm trying to teach you how to trade, not just tell you what coins to buy, because in most cases, that shit don't work out. But discord.gg/alpha Aere. Let's get into the meat and potatoes of the video now, where we talk about like allocation of funds into portfolios. So let's say you have $1,000, $10,000, $100,000, $1 million, whatever it is. What should you buy? How much of your portfolio should you invest in each coin? Well, in my opinion, for a less risky portfolio, you should do 50% of that portfolio into Bitcoin, period. At least, right? Like that should be the minimum. 50% into Bitcoin. Historically speaking, Bitcoin is the safest asset. You look at the top 100 coins today versus 5 years ago, it looks completely different. Even the top 10 coins 5 years ago looks different than it does today. out of the top 200 coins, something like 70, I can't remember the exact stat. I can't, so I apologize, but something like 60 to 70% of them are either no longer there, have never reached their high again, or are no longer trading. Let's look 5 years ago. Let's go to, we're in October, right? Let's go to October 7th, 5 years ago. Here are the top 100 coins, obviously. Bitcoin, Ethereum, XRP was number 3. Bitcoin Cash was up there. EOS was up there. Stellar, Litecoin, Cardano, Neo, NEM. VeChain's fallen, guys, right? Doge has risen. Zcash is not the number one. What's Omai's Go? Ox, Lisk, Decred, Qtum, Bitcoin Diamond was number 31. BitShares, Nano, Zilliqa. These coins are nowhere, a lot of these coins are nowhere to be found anymore. So when I say 50% needs to go into Bitcoin, that's your gold. That's your digital gold. That's sitting on digital gold. And also, when I say an actively managed portfolio is best, this is what I mean. Now, granted, if you would have put $100 into each of the top 100 coins, 5 years ago, you'd be on top. You would be, even with the coins that are no longer trading, but no one's going to do that. People are going to pick 5 to 10 coins, build a portfolio, and they probably picked a lot of losers and made some bad decisions. But my point is, the top 100 coins today, this is today, is going to look vastly different in 5 years. So just buying for the long term and sitting on it and just forgetting about it is not a solid and sound trading strategy. 50% into Bitcoin. After that, you want to look at about 30% of your portfolio into high cap coins. This is for the general public, right? About 30% into high cap coins. And then really you could do 10% to 20%, depending on how you feel, into low cap, right? And you can deviate from this. This is just kind of like generally speaking. This, in my opinion, is the important one, followed up by actively manage, right? Actively manage. There you go. But when I say by high cap coins, that's going to be your top 100 coins, right? Here, we're on the history here. So what I mean by that is the top 100, top 50 really coins. These are your high market cap coins, close to $1 billion plus. That's kind of where I would cut it off at. These are coins that have held up, have been around, your VeChains, your Aptoses, your ICPs, your HBARs, you know what I mean? So your high cap coin. After that, the 20% you can do what you want with, low cap coins, you know what I mean? Sub 50, under $1 billion. You could do something like 10%, put that into the top 200, play a little bit safer. And if you want to take 10% of the remainder of the portfolio, and you want to put it into more speculative plays, that's fine. As long as you are still actively managing those portfolios. So 50% into Bitcoin, 30% into high cap coins, your Cardanos, your Ethereums, and then if you want to just put all 20 into the lower cap, right? Like the top 200, whatever, do that. But if you want to split it up, do 10% into like the top 200 coins, and then 10% into speculative, lower cap coins, that's fine too. And there's been a theme. There has been a theme here, and that theme is none of this matters. None of it. Absolutely nothing. None of the dollar amount that you invest matters if you're not keeping up with crypto, if you're not part of a community, and you're not actively managing your portfolio. You're not getting out when all the warning signs are there. You're not buying when all the signs are there of a pump. Now, if you are more risk adverse, right? You can drop this Bitcoin down a little bit. So if you are more risk adverse, you want to take more risk, I should say, drop that to 40% Bitcoin. Maybe you want to add another 10% to speculative plays, or, another 10% to, somewhere in the top 200 market cap coins. If you want to take on more risk, you're a little bit more experienced, you're a little bit more knowledgeable, you're a little bit more active in the community, and you have a little bit more, understanding of the ebbs and flows of the market, feel free to drop that down to a 40%, take that 10% and invest it elsewhere. But the majority of your portfolio should be Bitcoin. Don't believe me? Let's just take a look at ETH to BTC, right? This is month, right? Bitcoin has been bleeding into, ETH has been bleeding into BTC, I mean, really, since 2017, ladies and gentlemen. You can see a clear trend down in ETH to BTC since 2017. This is ETH compared to Bitcoin, and it's been trending down. For now, right, Bitcoin dominance is trending up. So Bitcoin right now is the safer bet. Total market cap of altcoins is trending down, but we're in a bull flag, a bearish descending wedge. It's going to break out eventually. Till it does, Bitcoin is the safer bet. So for actively managed portfolios, the writing's on the wall right now that Bitcoin is a safer bet. However, like I have said, the upside potential on altcoins is greater than the downside at the moment. So while, it may sound a little bit bearish to say that there's probably more downside before upside in altcoins, I think that the upside potential is greater at the moment. So in a nutshell, this is the basics of building a portfolio, my advice, actively managing them, being part of a community, and then how to allocate funds, either that 40 or 50%, depending on what your risk adversity is, how to allocate them, be a part of the community, like I said. In the next few videos, we're going to build on this some more. I'm going to talk about, number one, how to research coins and how to look for coins that could potentially, exponentially make you money, and why you would choose this coin over this coin, how to dig into them, how to learn the tokenomics and the fundamentals of the coin. At the end of the day, you need to know what you're investing in. If you don't, then you're just doing it wrong. You're gambling, right? If you don't fully understand what you're doing and what you're investing in, you're gambling. You're not trading crypto, you are gambling. But on top of that, we're going to look at other things as well. This is just kind of video number one, or actually this is the second video in this series. But we're gonna keep expanding upon this to help people build better portfolios. And then as we get into alt season in the bull market, we're gonna be building a portfolio on this channel as a community, and maybe splitting it at the end of the bull run, whenever that is, 2026, 2027, and then just going from there. So stay tuned for more. Smash that thumbs up button, turn on notifications. There's going to be more videos coming like this, and we're going to actually dissect individual projects themselves and look for coins that I think are going to do well in the bull market. We got a lot coming for you guys. And then hop in Discord, discord.gg. Well, that's hard to see, /Aere. We go live a few times a week. Try to put out a video every single day at the very, very least. But more importantly than that, man, we are active in Discord, as you can see here. Not only for crypto too, but lots of stocks flying off, macro economy talk, but plenty of alt plays, ladies and gentlemen. The Bitcoin TA, the alpha, and guess what? It's free. Give me a try. That's all I got for this video. Appreciate you guys for watching. Stay tuned for the next one where we expand upon this series.